Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if that big fancy proxy statement is actually hiding a secret layer of executive perks or just a boring business review. So, Visa just dropped their 2026 proxy statement and it is a chunky one, packed with details about how they do business, who is in charge, and how much everyone gets paid. We're going to dive into the juicy bits, especially the numbers, and see what we can learn about where Visa is heading. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we break down more financial news and chat about investments. Check it out. They're talking about a virtual annual meeting on the 27th of January 2026. So while you can't physically meet up with the execs, you can still virtually vote your shares. This is all about the upcoming shareholder vote, so your input matters. They're asking you to vote on electing directors, approving executive pay, and other important company matters. This filing is labelled as a preliminary proxy statement, meaning it is still a draft and subject to change. But it gives us a good look at what they plan to discuss and vote on at their upcoming meeting. Visa starts by telling us how they see themselves as a company that enables opportunities, transforming transactions, and supporting businesses globally, all built on innovation for everyone. They process billions of transactions every single day. The company itself, Visa Incorporated, is a giant in the digital payments world. Their purpose is to uplift everyone everywhere by being the best way to pay and be paid. Pretty ambitious. Now for the numbers, and these are the big ones. In fiscal year 2025, Visa raked in $40 billion in net revenue. That is an 11% jump from the previous year. Their GAAP net income was $20.1 billion, a modest 2% increase. But when you look at their non-GAAP net income, which adjusts for some special items, it hit $22.5 billion, also an 11% increase. This tells us that their core business is growing strongly. That 11% revenue growth, that means they're bringing in significantly more money than before. Imagine if your income went up by 11% last year, that would be pretty fantastic. And for Visa, at $40 billion, that is a massive amount. The fact that their non-GAAP net income also grew by 11% shows that their underlying operations are healthy and profitable. They are very efficiently turning those sales into profits. They also processed a mind-boggling 329 billion payments and cash transactions in fiscal year 2025. With Visa itself handling 258 billion. That is an average of over 700 million transactions processed by Visa every day. That is a staggering volume and shows just how essential their network is to global commerce. The total payment volume processed by Visa was $14.2 trillion, an 8% increase year over year. Think about that. $14.2 trillion, if you were to put all that money into $100 bills, it would stack up incredibly high, showing the sheer scale of Visa's payment network. Now, let's talk about the people in charge. They're proposing to elect 11 directors. The board composition is 91% independent, which is good to see. This means most of the decision makers are not directly employed by Visa, which helps ensure they're looking out for shareholders. They highlight the backgrounds of their director nominees, all with impressive experience in technology, finance, and leadership. Names like Lloyd Carney, who has a background in networking equipment and information technology, and Terry List, a former CFO with extensive financial and leadership experience. Ryan Mainanady, the CEO, is also nominated. William Reddy, the CEO of Pinterest Inc., is a new addition, bringing valuable executive leadership and board experience, especially in payments and technology. The board is a strong mix, with expertise in payments, technology, senior leadership, public company boards, finance, global markets, marketing, risk, government, and e-commerce. You can see they have a broad range of skills to guide the company. Moving on to executive compensation, which is always a hot topic. Visa's philosophy is pretty straightforward, pay for performance. A big chunk of their executives' pay is tied to how well the company does, both short-term and long-term. They use a mix of base salary, annual cash incentives, performance shares, and stock options. For their CEO, Ryan Mainanady, in 2025, a whopping 95% of his target compensation was variable and at risk. For other top execs, it averaged around 91%. This means their pay heavily depends on hitting those company goals. The performance shares, for instance, vest over 3 years and are tied to earnings. Purse hair and how Visa's stock performs compared to the S&P 500. That is a strong incentive to focus on long-term value. Let's look at how they performed against those goals in 2025. Net revenue growth hit 11.2%. Beating their goal, net income growth was 11.5%, also exceeding their target. And earnings per S hair or EPS grew by 15.1%, again surpassing what they aimed for. This is where the pay for performance comes into play because they hit these numbers. Their annual incentive payouts were 140% of the target for each executive. That is a nice bonus when you hit your targets, and even better when you exceed them. That 11.2% net revenue growth means they brought in more money than expected. For a company the size of Visa, exceeding a revenue goal by even a fraction of a percent translates into hundreds of millions, if not billions of dollars. And that 15.1% EP's growth shows they are not only making more money on sales, but are also managing their profitability extremely well to the benefit of shareholders. Moving to the auditors, they are again recommending KPMG LLP as their independent registered public accounting firm for fiscal year 2026. This is pretty standard, and KPMG has been their auditor for a long time. Since 2008, the Audit and Risk Committee reviewed KPMG's performance, independence, and fees, and found them to be suitable. Looking at the fees, KPMG billed Visa $14.2 million in fiscal year 2025. The bulk of that, $11.3 million, was for the actual audit work. The rest was for related services like tax fees and other consulting. That is a significant chunk of change for an audit, but for a company of Visa's size and complexity, it is not entirely unexpected. Here is an interesting one. They are asking shareholders to approve amendments to their certificate of incorporation to limit the liability of certain officers. This is in line with Delaware law, which allows companies to offer similar protections to officers as they do to directors. Essentially, it means officers won't be personally liable for monetary damages for breaching their duty of care unless it involves bad faith, intentional misconduct, or personal gain. The company argues this helps attract and retain top talent by reducing their personal risk. It is a way to keep officers confident in making tough business decisions without excessive worry about lawsuits. Now for the shareholder proposals, and Visa wants you to vote against all of them. First up is a proposal asking for shareholders to be able to act by written consent. This means shareholders could potentially make decisions or propose changes without needing a full shareholder meeting. Visa argues that matters requiring shareholder approval should be discussed and voted on at a meeting where everyone has a chance to participate. They also highlight that shareholders already have meaningful rights, like calling special meetings with a 15% ownership stake and the ability to nominate directors through proxy access. They clearly feel their current shareholder engagement is sufficient. Another proposal is asking for a report assessing whether their inclusion programs, likely referring to diversity, equity, and inclusion, provide a positive return on investment and account for litigation risk. Visa's response is that they believe an inclusive culture is key to leadership and innovation. They also say that their board and committees already oversee risk management, including human capital, and that preparing the requested report would be a distraction and not provide meaningful new information to shareholders. They emphasize their commitment to equal employment opportunities and valuing individual differences. So, what is the story here? Visa is a powerhouse, and their financials for 2025 look strong with solid revenue and income growth driven by an incredible volume of transactions. They're investing in technology and innovation, and their leadership team seems well qualified, with a focus on long-term shareholder value through their compensation plans tied to performance. However, they are also navigating a complex landscape, with shareholder proposals highlighting areas of concern around corporate governance and social responsibility. The move to limit officer liability is a defensive strategy to attract talent, and the pushback on shareholder rights proposals suggests a preference for a more controlled decision-making process. My take is that Visa is in a solid financial position, and their strategy seems sound for maintaining that. The risks they highlight are real, especially concerning cybersecurity and the evolving regulatory environment. The shareholder proposals, while perhaps not leading to immediate changes, do signal areas where shareholders want more transparency and accountability. It will be interesting to see how Visa balances these demands with their own strategic priorities. Alright, that is our breakdown of Visa's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.